Hello everyone, and thanks for joining us today, and welcome to this presentation of the right way to trade with candlesticks. Welcome. This promises to be a really informative presentation. I know that a great many of you are trading with candlesticks and not seeing the results you'd like. So today I'm going to teach you a method that can really ramp up your probabilities for success while trading the candlesticks. Welcome once again. Thanks for taking time out of your Thursday to come join us. My name is Primo. I am the president and founder of Specialist Trading, and we are your premier educational company. We're all about teaching traders how to trade. We're in the business of teaching traders how to become consistent traders, because we know that many of you are struggling. You're probably taking all the courses, you're going to all the chat rooms, you're doing everything you've been taught and read and told to do, and you're just not seeing the results you want. We feel at Specialist Trading it's because you haven't been given sound fundamental education that has stood the test of time. So this is what we do. I've been trading for 38 years. I started out on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of them I was a specialist for DLJ. I traded through the crash of '87 and the bull market that followed after that. So I've seen and traded and been in just about every market environment imaginable. So I know what works and what doesn't work. And when I say work, I'm talking about consistency. So we're trying to make our traders consistent. And so I left the floor in the mid-90s to manage money and to pursue my own trading account. And 7 years ago, I started Specialist Trading. I teamed up with Pro Trader Strategies, where they market and promote all of my courses. And Specialist Trading is the teaching aspect of the company. So I'm going to show you a great technique for trading candlesticks. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results today, a lot of charts, a lot of different examples in different markets and time frames. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. We are required to show you this, so please take a moment to look at it. And while you're doing that as well, I would like to invite each and every one of you to follow us on Twitter. I post free information on a daily basis. You can see there's our handle right there, at SPC, LSTTRADG. Anything from daily financial wisdom to actual signals that our members have just taken from our strategies. In fact, I believe there are a couple of them I just posted just about an hour or two ago. So lots of great ways to get information on signals and just in terms of daily financial wisdom and different ideas we have about trading. Now, if you are interested in watching some of my videos and some small learning techniques, you can go to Facebook. As I said, I teamed up with Pro Trader Strategies, and they have a Facebook page there at protraderstrategies.com. Just log in with that, and you see a lot of videos and free information on there as well. So lots of ways to learn from us, lots of ways to see what we're all about. Now, to start, as I stated, I've been trading for 38 years. I've seen and traded just about everything there is, but if you've attended my presentations in the past, you know I make no secret about it that I struggled tremendously my first year or two in trading. I couldn't make ends meet. I was having maybe 3 or 4 great trades, and then the next trade I would just give everything away. So this is the same situation I see so many traders in. What turned my trading around was my mentors, who were traders themselves on the floor, finally setting me aside and telling me to really simplify my trading, because the reason why I wasn't getting the results I wanted is because I was overcomplicating my trading. So my goal is to teach you the same things that were taught to me, the same things that my mentors were able to change my way of trading around. This is what we do in our courses. Even though we provide you with strategies that produce signals and generate signals, we're not a company that just wants to blindly generate signals so you can take them. We want you to understand the process. We want you to understand what the format is of each one of these different trading methods, and then mold it and design it to fit your needs, trade it aggressively or conservatively. But they're all extremely simple, maybe 3 to 5 rules at most, maybe 1 or 2 indicators at most. And so this is what we do. We're more of a mentoring course than an actual systematic company that just generates signals for us. So my mentors taught me to keep things as simple as possible, and that's when my trading turned around. So this is what we try to instill in all of our members, is that simplicity equals consistency. You know, if you look at people that have been trading a relatively short time, anywhere from 5 to 10 years, which is actually a rather short time to be trading, most of their methods are extremely complicated, lots of rules, lots of convoluted logic, lots of indicators. But if you look at the people who have been trading 30, 40, 50 years, Most of their trading plans are extremely simple, maybe 3, 4, 5 rules at most, very, very basic. These are the guys you want to follow and emulate because obviously they've been trading for 30, 40, 50 years. And so it's all about consistency. Anyone can hit a home run now and then, but you know, that is in no way going to sustain you because you can just as easily lose everything. Take it from someone who's been there firsthand. That's the way I used to trade when I first started trading on the floor. I would make tons of money and then give it all away. So I had nothing to show for it at the end of the month. So there's no consistency in that. It's more about 2 steps forward, 1 step back. So this is what we try to instill in all of our members and all of our students. Okay, now today I'm going to teach you a great technique dealing with candlesticks. But before we begin, once again, this is a class. So if you have any questions, I know some presenters like to take questions while the class is unfolding. Excuse me. But if you do have a question, kindly wait till the very end, okay? Wait till the very end of the presentation because many times if you wait for the next slide, your question will be answered. And I have a lot of information and I don't want to slow things down, okay? The one thing I will answer, a couple of questions actually. Most popular, is this being recorded? Yes, we record all of our presentations so that if you have to leave early or if you're having technical difficulties, you can always request a link to this through Pro Trader Strategies, who you signed up with. Sometimes as well, people have difficulty during the presentation. The sound dips in and out. Many times it's best just to log out and log back in, and that will take care of the problem. Okay, so once again, save any questions for the end. This won't be real long, but I just want to give you all of this free information that you can start using right away. All right, so why don't we begin? Let's start out with candlestick patterns. Once again, candlestick patterns are extremely popular. I remember when I first started out trading, I actually had to go to a friend who had taken a course through someone else to learn about candlesticks. This was in the 80s. No one really knew what candlesticks were. And so he kind of taught me from what he had heard from someone else, and it was just something that was passed along. And then ultimately it got more and more popular. Now there's entire courses and books and websites dedicated to candlestick trading. But there are numerous candlestick patterns. If you're not familiar with, these are just the basics. Anywhere from a doji all the way to a shooting star to an evening star. There's lots and lots of different patterns to look at. We're not going to go over each and every one of them because there's just far too many. We're going to just look at the most popular, which are engulfing patterns. Okay, these are engulfing patterns, bullish and bearish engulfing patterns. Very simple to identify and extremely popular to use. Now, if you're not familiar with what a bullish or bearish engulfing pattern is, it's a 2-bar pattern, as you see here. Bar number 1 on a bullish engulfing pattern is usually down. As you see there, the dark body opens and then closes lower. Bar number 2 opens and closes higher. The reason why they call it an engulfing pattern is because the open to close range totally engulfs the range of the open to close of the previous bar. Okay? Once you see one of these patterns, conventional wisdom tells us that usually you're going to have some upward move for the next 3 to 5 bars. And this does work from time to time. Now, conversely, a bearish engulfing pattern is a 2-bar pattern. Once again, bar number 1 is an update, where you open and close higher, and then bar number 2, you open and close lower. The engulfing pertains to the open to close range of bar number 2 engulfs the open to close range of bar number 1. Usually when you see a scenario like this, well, it's telling you that the trend or the move will be down for the next 3 to 5 bars. This is a good edge to have. Okay. Now, if we look at the conventional wisdom definition of engulfing patterns, the engulfing candlestick pattern is a reversal pattern, usually occurring at the top or bottom of a trend. This is the way I was taught. This is the way it's defined. This is the way most people use engulfing patterns. And for all intents and purposes, this is the way most people use candlestick patterns, because most candlestick patterns are deemed reversal patterns. Okay. So if we're just talking about engulfing patterns today, we see here in this older chart of CVX, we see here that the stock obviously was going down, all right, and so we're going lower. Now you want to look for some type of reversal pattern. Well, lo and behold, here's a bullish engulfing pattern. All the books, all the texts tell us, all the teachers say this is a buy signal, okay? So you jump in and buy, and look what happens, okay? So you hit with a loss on your very first trade, but you think, well, maybe I jumped the gun, and now maybe the trend is over now because we've gone much lower, and now there's another bullish engulfing. So I'll take this signal. I'll probably make everything back. There'll be a huge rally, and then look what happens. Okay, so this look familiar to anybody. This looks familiar to me because when I first started trading candlesticks, this used to happen to me all the time. Now see, I'm not saying that there's anything wrong with candlestick patterns, and they will work as reversal patterns from time to time. But there isn't really a high level of probability the way most people are taught to use them. So we have to ask ourselves, how can we increase our odds for success when we're using candlesticks, and most especially when we're using bullish and bearish engulfing patterns? Well, here's the rule we go by, and this, in my opinion, is the correct way to trade any candlestick pattern. Candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. Okay, now this goes against conventional wisdom. Conventional wisdom tells us that these are reversal patterns, meaning that they are at the bottom or top of a trend and the trend is going to reverse. Well, it's been my experience in 38 years of trading that it's the opposite. Candlestick patterns work better when you are in sync with the trend as opposed to trying to pick a top or a bottom, because that's really a recipe for disaster. You're basically hoping and praying that it works. And sometimes it will, and you'll get these really great reversal patterns. But the times it doesn't, you usually give everything back. Remember, I stated at the beginning of this presentation, we are not teaching our students to hit home runs. That's not our goal. We're trying to instill consistency. And anytime you try and pick tops and bottoms, you will not find consistency. It's been my experience that that really is a recipe for disaster. It's more of a gamble than anything else. So we want to look for candlestick patterns that are in sync with the trend as opposed to picking bottoms or tops of the trend. Okay, so with that said, everyone has a different idea of what the trend is. All right, some people look at indicators, some people look at patterns, some people have proprietary tools that tell them what the trend is. Well, we at Specialist Trading feel we have the best tool for discerning what the trend is, and that is our PET-D tool. Okay, it stands for the Primo Early Trend Detector. Now, I named it this, but I was introduced to this on the floor of the exchange some 30 years ago. And what it is, it's a color bar algorithm. You know, when I first started using it, I had to come up with this formula by hand every day for looking at only at daily bars because we didn't have high-speed computers then or programmers. But now that we do, Specialist Trading and Pro Trader Strategies has been able to put it together in a green and red algorithm. So if you see a series of green bars, it's telling you that you're in an uptrend. That's how simple it is, regardless if you're looking at a 5-minute chart or a weekly chart. Conversely, if you see a series of red bars, well, it's telling you the short-term trend is down. So that's all we need to know. If we see red bars, we know that we're only looking for bearish engulfing patterns. If we see green bars, we're only looking for bullish engulfing patterns. So here's the rule just with this particular candlestick pattern. Bearish engulfing patterns, we're only going to buy if the engulfing bar, that's bar number 2, remember it's a 2-bar pattern, if bar number 2 or the engulfing bar or both bars are colored green. Okay? So either both bars or the second of the 2-bar pattern needs to be colored green. That's the only way we're going to take that as a type of bullish signal. Now conversely, for bearish engulfing patterns, we're only going to sell if the engulfing bar or both bars are colored red. So remember, it's a 2-bar pattern. If both bars 1 and 2 are colored red, or at least if bar number 2 is colored red, then it is a valid sell signal. If we see a bullish engulfing pattern and it's colored red, please run. Do not take that trade. If you see a bearish engulfing pattern but it's colored green, do not take the trade. Why? Because you're out of sync with the trend. Remember, we want to be in sync with the trend. We have a higher probability for success. And it does not matter if you're trading this on a tick chart, if you're looking at weekly charts, if you're trading the Forex, if you're trading stocks or the futures. It does make no difference. So let me show you some examples. Let's start out with stocks for all you stock traders. And once again, if you have any questions, kindly wait till the end and we'll answer each and every one of them, okay? All right, let's start with stocks and let's look at this chart in Urban, okay, URBN. Now, right off the bat, conventional wisdom would tell us, well, we're in an uptrend, okay? So the way I've studied candlesticks, this is, someone who's just started studying candlesticks, is they are a reversal pattern. So obviously, if we're in an uptrend the way we are now, I want to look for a bearish engulfing pattern. This is the way 99.9% of all traders trade. Well, as we see here, we actually have 3 patterns. We have 2 bullish engulfing patterns circled in green, and we have 1 bearish engulfing. So you've been taught that it's a reversal pattern. So we're probably going to reverse this trend and then head lower. So you take this one, okay? You go short, and look what happens, okay? This is the way most people trade candlestick patterns. Remember, we want to be in sync with the trend. So how do we know which one of these to take? Which one should we have taken? All you have to do is apply the PET D. Now the PET D was green for the bullish patterns, and it was also green for the bearish one. So obviously the bias was to go long, to stay long. Had you taken any one of these two signals, you would have had a very nice trade to the upside in Urban. All right, see how simple that is. There's nothing that you have to follow any news events. You don't have to worry about special indicators that cross and mix and match, and you're watching 5 or 10 of them. You don't have to listen to economic indicators. All you're looking at is the candlestick pattern and just making sure that you're in sync with the trend. Now you have that level of consistency you've been searching for. All right, let's go to another example here. How about letter K? All right, now obviously we are in an uptrend. Now if you were in an uptrend and you traded the way most traders trade, you'd say, well, I'm only going to look for bearish engulfing patterns. But had you done that, you would have bypassed this bullish engulfing pattern. You would have added the PET D and see it was green, and you would have missed this nice 2 or 3 move to the upside. Now, at this point, what do we have? Well, we do have a bearish engulfing pattern, and bar number 2 is colored red. So it's giving us a confirmation to take it, and now look what happens. You see how fine-tuned the PET D is for discerning what the short-term trend is. How about Amazon? All right. Now, looking at this, someone could say, well, it's kind of in a slight uptrend, but nothing really is happening. You don't have enough information. Well, at this point, we had a bullish engulfing pattern. So someone would say, well, I'm not sure if I should really take that. Well, you don't have to ask yourself that question. All you have to do is apply the PET D. And bar number 2 was colored green, so it is a valid opportunity to go long. So you would have purchased Amazon using this technique, and nothing really much happened actually in the next week. In fact, you're kind of sitting there and you notice that there's a bearish engulfing pattern right here. Should you take that and get out of your long position and go short? Using the PET D? No. Why? Because the PET D needs 1 or 2 of those bars to be colored red in order to go short, and both bars were green, telling you that we are still in an uptrend. So you would have held off on getting out of your long position and remain long, and it would have been a good thing because Amazon went from roughly 300 to 380 in the next couple of weeks. How about CVX? Now this is the example I showed you earlier. Remember, conventional wisdom always told us that if we are in a downtrend, we look for some type of reversal pattern, and this is where you would have purchased right here. But had you had the PET D, you would have simply added that and seen that both bars were red. In fact, all the bars were red. There was no way you would have even considered going long that. So you would have bypassed all of this selling, okay? You would have been patting yourself on the back for being such a smart trader, knowing that you were in sync with the trend by not going long. Now, once you had the second one, most people would say, well, it's bound to stop now. We've really come down a long way. Maybe I'll go long and take this signal. Nope. PET D is still colored red, so you would have bypassed that as well. You see how the PET D can not only confirm and validate a setup, but it can also keep you out of setups that are not confirmed and are not validated. If we look at Boeing here, we see that all the colors of the bars are green. So what is this telling us? It's telling us that we should only be looking to go long any setup we get. It can be a candlestick setup. It can be a strategy from me. It can be something that you've put together. It can even be a system or a strategy from another educator. It doesn't matter. As long as it's telling you to buy somewhere, you are in sync with the trend. Now, if we're using candlesticks, bullish engulfing patterns are what we're looking for. And there's 2 bullish engulfing patterns, roughly about 130, 132. Had you purchased there, the next week nothing really happened, but that's okay because 2 weeks later the stock went up roughly about 15 points. How about VLO? Now at the beginning of this chart, all the bars were red, telling you that we were in a clear downtrend. But roughly about 2 weeks later, all the bars turned green. So what does this tell us? It tells us that we are now in a full-fledged uptrend. We should be looking for candlesticks that are going to be telling us to go higher. And bullish engulfing patterns do a great job of that, and you had one to go long at 53, another one to go long at 55, and the stock went up to roughly 59 in the next week or two. See, trading is easy when you're in sync with the trend, but the trouble is most of us are taught, myself included when I first started, that you should actually try and pick tops of trends and pick bottoms of trends. And the reason is because every once in a while you'll hit it and it's like you hit the jackpot and you make a lot of money. The only trouble is there's no consistency in that, and 9 times out of 10 you give it all back. So we don't want to be doing that as traders, because ultimately it will catch up with us and we will wipe out our entire account. What we're trying to do is get consistency so you can trade 30, 40, 50 years down the road. You'll always be able to come back another day. XLNX, once the bars turned all red, we only look for bearish engulfing patterns. There's 2 right here, roughly at 44, and in the next couple of weeks the stock went down to 38, 6 points lower. And MOS, this was at the beginning of the year. Someone just looking at this would say, well, Steve, there's no real clear-cut trend, even though there is a bullish engulfing pattern here. I don't really see any trend. We're kind of in a rangy market. I'm not going to take that. Well, if you applied the PET D, all you need is for bar number 2 to be colored green. And it was. So that was your validation right there that, well, you have a high probability trade here to go long. And the stock went from 46 all the way up to 52 in the next 2 or 3 weeks. Now this can also work on commodities and ETFs. Once again, we said some of the best trades are the ones you don't take. Now conventional wisdom, looking at this chart, would say that we should buy gold or the ETF on gold, GLD, because we've been going in a downtrend and we're looking for a reversal pattern, which is right here. Here's a bullish engulfing pattern. That's what conventional wisdom teaches us. But now that you're an advanced trader and you know that candlestick patterns work better when you're in sync with a trend as opposed to trying to pick a bottom or top of a trend, you simply apply the PET D and you see that both of the bars were colored red. There's no way you should be taking a long signal right there. And it would have been a good thing if you didn't, because the stock went down from 122 down to 115 in the next week or two. Now, we all know that crude oil had been falling out of bed the end of 2014 coming into 2015. Now, many people got hurt trading crude oil trying to pick a bottom. If we look here, going all the way back to October, all the bars in crude oil were red. So there's no way you should be trying to pick a bottom in crude oil. If the trend is down, we just want to go with it. See, our job as traders is we just have two requirements. We want to find out what the market wants to do. That's our first requirement. Our second requirement is we just jump on board. And that's it. We don't have to pick tops and bottoms. We don't have to look at tons of indicators. We don't have to try and discern what the news means. All we have to do is figure out what the market wants to do by looking at the chart, using a few tools that have stood the test of time, and jump on board. So obviously the market was telling us back in October, even earlier, back in August, in crude oil, it wanted to go lower. It was inviting us to come with it. Most people want to fight it. We've been trained and taught that you should pick a bottom. Those people lost a lot of money. Okay, people eventually picked some type of a short-term bottom in crude oil because it had a bounce the first month or two in 2015. But why would you want to take the risk of trying to find a bottom? It's much easier. You're going to sleep much better at night just going with the flow. Much better swimming with the current at your back. So crude oil, all the bars were colored red. This means the only signals we're going to be taking are bearish engulfing patterns. If we look, we see here that we have 1, 2, 3, 4 bearish engulfing patterns all the way into the end of November. And we all know what kept going on in crude oil. All right, so that's ETFs, stocks, and commodities. Let's look at the E-mini S&P. I will start off with a daily chart of the E-mini. This was last month. We see here that we have a bearish engulfing pattern circled in red, and we have a bullish engulfing pattern. Now, I know it's only a small sampling here, but these are actually some nice swings. Each one has about 40 points in it. That's about $2,000 per contract in the E-mini. So we have to ask ourselves, which signal or setup will we take? Well, in order to go short, we would need to have bar number 2 at least colored red. In order to take this long, we'd at least have to have bar number 2 colored green. Once we apply the PET D, we see that, well, this was a valid sell signal. So you could have made a nice 20 or 30 points to the downside, and then guess what? You were met with a valid buy signal. And look what happened. Now, if we go on a 10-minute chart, the same rules apply, the same requirements. We just want to be in sync with the trend. Now, as we see here on this 10-minute chart, we are going higher, so the trend is up. Rather than try and look for topping patterns, we're going to just simply go with it. And we have two bullish engulfing patterns right here. Now, most people would negate those because they're looking for a bearish engulfing. We now know that we always want to be in sync with the trend. Once we apply the PET D, we see that all the bars were colored green, so those were valid setups to take. Roughly, you could have gone long around 1925 on balance, and the E-mini went up about 5 points in the next half hour or hour or so. Okay, now you could have taken a nice 5-point gain on each contract. As we began to sell off, as you see right here, the bars remained green. So even during this sell-off, the PET D was telling you we are still in an uptrend. Do not look to go short. This is not a top. We are just simply resting and pulling back before we go higher. So here's another bullish engulfing pattern. You could have taken this signal or at least had reassurance that we were going higher, and look what happened. We went even higher. Now at this point, we're at 1930. You've got like roughly a nice 7 or 8 point gain. We have a bearish engulfing pattern. Are we going to take it? No. Why? Because both bars are green. So you would ignore that, and look what happened. Once again, do you see how easy it is to trade? We only have two requirements. Learn and listen to what the market wants to do. The market was telling us it wanted to go higher. Requirement number 2, simply jump on board. Go with it. How about this 2000 tick bar chart? I know a lot of you are probably saying, well, Steve, this is nice when everything is going in one direction, but many times, you'll have whipsaws or different directions and you won't get out, or you won't have those nice runs the way you have, okay? So how can we make sure that we can switch, or at least, be in sync with the trend when it changes? Okay, well, we're not going to sit here and promise you that every setup is going to be a winner. It's going to be a positive one. But you will have this consistency. Let me show you this example in the E-mini. All right, so if we look here, we're in some type of uptrend on a 2000 tick bar chart. All right, if we apply, or if we look for engulfing patterns, we see we have a bullish engulfing here at the bottom, we have a bearish engulfing, and then we have another bullish engulfing. So right off the bat, which ones should you be taking? All we have to do is apply the PET D, and we see here that the bars are all green, telling us that the only setups we should be taking are buy setups. All right. Remember, the PET D is not a system. It's not a strategy. It's just a confirmation of the trend tool. That's all it is. So if you're asking what type of results do you get systematically, or what's the win-loss ratio of the PET D, this is not a system. You can use this on any. It's like asking what's the win-loss ratio, or what are the result numbers of a moving average. A moving average is not a system. It's not a strategy. It's simply a tool that you use to indicate something. And that's what the PET D does. The PET D is a short-term trend identifier. So you can apply it to virtually any strategy or any technique. Now with this particular technique, it's telling you that only take the bullish engulfing patterns. Forget about this bearish engulfing pattern right here. So had you taken that, let's say roughly you took it roughly about 1950 on balance. Well, look, you had a nice run up to the upside. So you made about 6 points in the next roughly half hour or so. Not a bad trade. But the bars remain green, and at this point, you had a lot of confirming signals all the way up telling you it was safe to stay in the trade. But once you got up to the very top, what happened? You were met with a bearish engulfing pattern. In order to take that trade, you would have to have bar number 2 colored red. Was it colored red? No, it's still green. Therefore, you would bypass this. So you're still long, roughly from 1950 or 1951. And the stocks, or I should say the E-mini, starts to sell off a bit, but lo and behold, you're met with another bullish engulfing. So this is giving you confirmation to stay in the trade. So you've got roughly a nice 3 or 4 point gain. But guess what happens? We see our first red bar since the beginning of the day, or since the beginning of this trend, and at the same time, if we notice, this is a bearish engulfing pattern. And bar number 2 is colored red. So this is your signal now to exit the trade. Now you could either exit what you bought down here or down here and take a nice 3 or 4 point gain, or you could be a little bit more aggressive, exit, and then go short. And as you see here, this was the PET D. Remember, an indicator, a tool. It is not a strategy. It is not a system. Therefore, you can't give it any result numbers. It's simply a verification tool telling you if it's okay to take a trade or not. Therefore, this gave you the verification and confirmation that it was okay to go short if you wanted to, and look what happened. Remember, we weren't listening to any news. We weren't in some chat room or trade room listening to all the traders tell us what they think is going to happen. We weren't watching TV. It wasn't as if the market called us up and told us to sell everything, I'm going lower. We just were listening to it with applying the PET D and using simple candlestick patterns. That's it. See, trading doesn't have to be complicated. It's only ourselves that overcomplicate trading. And you can still apply these to Forex. I know a lot of Forex traders love to use candlesticks. Well, this is a great technique and a great tool for them. If you see here on this older chart of the dollar-yen, this is last September. Obviously, we're in an uptrend. And if we apply the PET D, it was confirming it. All the bars were green on this daily dollar-yen chart. Now, if you're looking for bullish engulfing patterns, look at all the confirmation you had to go long all the way up in the dollar-yen. Remember, conventional wisdom was always telling us to look for reversal patterns. But we don't want to use that because the odds are in our favor if we're going with the trend. If the trend is up, we want to look for bullish engulfing patterns. We don't want to do the opposite. So the trend is up, and look what happened. I mean, this is thousands of dollars per lot here in the Forex markets. The same thing works to the downside. Now, the euro dollar, if you've been tracking that, we all know the euro dollar has been going lower for a long time now. All right? If you've lost money in the euro, most likely it's because you're trying to pick a bottom. This is the way we're all trained. This is the way I was trained. We're trying to pick tops and bottoms. It's a recipe for disaster. Trust me. For someone who's been trading 38 years, I don't try to pick tops and bottoms anymore. I think that's what sustained me. Now, if we look here, all we have to do is simply add the PET D, and all the way back as far as September 2014, the bars started to turn red. So this tells us we're in a downtrend. It's telling us that the euro dollar wants to go lower. So our job is just simply to jump on board. Now we have to look for some structure. So right now we're looking at bearish engulfing patterns. If we look at all the engulfing patterns, we see that right at the very top we had two engulfing patterns, bearish engulfing patterns. Now later on, as the euro went lower, we had a couple of bullish engulfing patterns. Most beginning traders would say and see this as some type of bottom. It's a reversal pattern, and this is where they would exit their nice money that they made here, their nice short trade, and switch and go long. Remember, I told you this is the way I used to trade. I would have a couple of really good trades, and then I would give it all back, trying to pick a bottom. Okay, so that's the point. As you see here, the entire way down, we were met with more bearish engulfing patterns and more bullish engulfing patterns. But since the bars are red, you would have bypassed the bullish and only taken the bearish. So let's recap before we go into question and answer portion of this presentation. Only buy or sell candlestick patterns that are in sync with the trend, and the best thing we know for discerning what the trend is the PET D. Once again, this was a formula that was taught to me some 30 years ago on the floor. At that time, 30 years ago, we had no high-speed computers or programmers, so we had to only apply this by figuring out by hand. And it's not a very difficult formula, but it was something that if, there's no way you could do it for 5-minute charts, because by the time you finish the calculations, you would have to start the next 5-minute bar. So we could only use it for daily bars. But now that we have programmers and high-speed computers, Pro Trader Strategies teamed up with me, Specialist Trading, and we put together the PET D color bar algorithm. And it's so simple. If the majority of bars are green, the trend is up. If the majority of the bars are red, the trend is down. Then all we have to do is apply some type of structure in the direction of the trend. Now, important points to remember. I don't want to just, I know a lot of you will say, well, Steve, boy, this is a great strategy. This is a great system. What's the win-loss ratio? What's the worst case scenario drawdown? What's the profit factor? First of all, this is not a complete strategy. All I just showed you was some type of entry technique with high probabilities using candlesticks. But this was not a strategy. In order to have all the pieces of the puzzle for a strategy, we need to talk about stop placement. We never talked about that today. It's an extremely important piece of the puzzle. We need to also talk about advanced entry signals. Where do you get in on the setups I just shared with you? Do you get in that day? Do you get in the next day? Do you place a limit lower on? Or how about once you're in the trade, where do you exit? How about advanced exit signals? Now, some of those setups I showed you had some nice, quick in and out trades. Others were sustained for a long time. How do we decide where to get out? And then lastly, and most importantly, we didn't talk at all about money management. How many shares, how many lots, how many contracts should you be trading? These are all important, extremely important pieces of the puzzle that we didn't really go into today because all I was doing was sharing with you a technique about being in sync with the trend. If you trade candlesticks and you like trading with candlesticks but you haven't seen the results you've wanted, well, all you have to do is be in sync with the trend. You can use whatever tool you discern as the trend, or you can apply the PET-D. Now here's the offer we have for all the attendees today real quickly. We're giving you a 2-for-1 attendee special. We're combining the PET-D, the Primo Early Trend Detector, with probably one of our best candlestick strategies. That's strategy number 5. In fact, that strategy was specifically designed for candlestick trading. It is probably our most consistent candlestick strategy, and coupled with the PET-D, it has amazing results. But remember, this is a strategy. It's not a system. A strategy can be traded a number of ways. It can be traded conservatively. It can be traded aggressively. You can get in and out very quickly, or you can stay in for the long haul. So therefore, it's not a system that has win-loss ratio numbers, that has worst-case scenarios, or it goes back 10 years, because everyone trades it differently, but it's extremely, extremely consistent. Once you couple it with the PET-D, well, you only ramp up your odds for success even greater. In fact, let me show you some current signals with strategy number 5 and the PET-D. Okay, as we see here in CRM, this was just about 2 or 3 weeks ago at the beginning of March, we had a buy signal. Strategy number 5 will generate a buy signal automatically for you, but we teach you all the rules anyway. So it generated a buy signal on the 25th of February, just actually about a month ago. Okay, if we see here, looking at this, and this can be applied with any strategy, but we see here that, well, okay, let's say you're new to trading, you're a little bit frightened, or maybe you're not really confident. So how will you know whether to take this or not? I mean, what are the odds that this may have a high probability trade? Well, all we have to do is apply the PET-D, which comes with this 2-for-1 combo, and we see here that all the bars are green. So you want to have a buy setup when the bars are green. This is giving you the confirmation to take the trade. So you could have taken this signal just a month ago in CRM, roughly around 63, and you would have had 8-point gain in one day. Look what happened the very next day. Now, once again, there was obviously some news event happened where CRM opened up 8 points higher. We didn't know anything about it. The company didn't contact us and tell us, hey, tell all your students to go long because we're going to have an announcement where the stock's going to gap up 8 points. We didn't know anything. How did we decide to go long? Because we know how to listen to the market, and we go in the direction of what the market wants to do. We just jump on board. We don't try to fight it. Now, we would have recommended exiting that day because you would have hit your exit point. 8 points in one day is not a bad trade. And as the stock sold off and pulled back, well, guess what? Strategy number 5 generated another buy signal just a few weeks ago. All right, this was roughly at 65 level, and you roughly would have made another 4 points in 1 week. So just in the past 3 or 4 weeks, that's 12 points on just one stock. Now these are buy signals. GoPro generated a sell signal a little over a month ago using this strategy number 5 with the PET-D, because once again you see that the setup was generated on the 4th and the bar was colored red. So the PET-D was giving you the confirmation that you can take this trade, and 8 points in 1 week to the downside. Okay. Now here's BIIB. We realize that this is an expensive stock and not everyone can be trading this. Even with small odd lot, it's too expensive for most people. That's okay. We have a lot of members who apply all of our strategies and techniques to options. So whereas it may be too expensive to purchase the stock, all they do is simply buy a long call. Or if it's a sell scenario, they purchase a long put. Now in this case, we're looking at BIIB. We see that there's no real trend here. Someone looking at this will say, well, there's nothing really that you can spot. The stock has been going sideways. It's in a range. I'm not going to do anything. Okay, that's fine, but you don't know what we know at Specialist Trading, because strategy number 5 generated a buy signal just a few weeks ago. Now, someone's saying, well, obviously this is too expensive for me to purchase the stock, but I'm interested in options, but how do I know this trade's going to work out well? Well, we just apply the PET-D, and the bar was colored green. The setup bar the day on the 13th that the buy signal was generated was colored green. So if you were savvy enough to have this and be in front of your computer, you could have entered into the trade at the end of the day or waited until the next day. But either way, the stock went up 60 points in 1 week. Okay, so that would have been a very nice gain with options. Now here we're looking at the euro dollar once again. We can see here this is from going from now December all the way up into the second week of March, just last week. Obviously the euro has continued to go lower and lower and lower. Some people could have tried to pick a bottom around here, but it wouldn't have lasted very long because look what happened. Well, once you apply the PET D with strategy number 5, look at all the sell signals that were generated, and all were confirmed using strategy number 5. It's a great candlestick strategy, comes with stop placement, exits, comes with money management, also comes with the PET D in this 2-for-1 combo. Now lastly, I want to show you something that happened yesterday. We all know that the markets really fell out of bed yesterday. There was a strong downtrend yesterday. A lot of people got hurt trying to pick a bottom, thinking that, well, this is going to stop, it's going to go higher. And we kept going lower and lower and lower. How could we have used strategy number 5 with the PET D to help us trade yesterday? Well, let's look at the E-mini on a 10-minute time frame. Okay. Now, looking back in hindsight out of yesterday's action, obviously we were going lower. Okay. Obviously, someone looking in hindsight would say, well, yes, we should have been shorting that day, but how would you have known in advance that we were going to go down that far? Well, first thing we want to do is apply strategy number 5, and the strategy number 5 generated sell signals. In fact, 4 sell signals. Okay. But how would we have known to take them? By applying the PET D. The PET D would have colored all the bars red. In fact, even coming into the beginning of the day, the bars were colored red. The very first 10-minute bar of the day generated a sell signal. So you could have just taken this one signal here at roughly 2085 and had a nice 30-point downside by holding it all day if you wanted. Okay, so this is, I know a lot of people will show you charts that are, weeks, if not months of years old. This happened yesterday. These are strategy number 5 signals with the PET D. So this is the offer we're having today. This is what we call our candlestick combo. It's strategy number 5, which is a candlestick strategy, and in combination with the PET D. All right, strategy number 5 is a great strategy that has a high level of consistency, but when combined with the PET D, you ramp up your odds for success. Okay, this comes with instant course access, detailed instruction, 5 videos. We teach you all the entries, all the exits, and all the stops. Comes with signal alerts. You have weekly video training lessons as well. Includes both add-ons, so there will be a up and down arrow generated for buy and sell signals, and also access to my personal email where you can contact me wherever you'd like, whenever you want. So this is 2-for-1 attendee special, 2 great techniques. Now, Pro Trader Strategies has this offer on their website for close to $3,200. But we're discounting it today, deep discount, in fact, down to $19.95. And the best thing that Pro Trader Strategies has decided to do is to offer payment plans for this combo. So we realize that $19.95 may be still difficult for some people to meet in one lump sum. You can call up or contact the people at Pro Trader Strategies, and they can put together a payment plan with you. So you can relatively put down a relative small discount payment down, and you can be up and running as early as today. So these are 2 great techniques coupled together. Remember, once again, these are not systems. These are simply great strategies that come with a lot of training and a lot of mentoring personally done by me. If you're interested in purchasing our 2-for-1 combo, our candlestick combo, here's how to contact us, and here's how to take advantage of that deep discount, which is for a limited time only, by the way. Contact Pro Trader Strategies at protraderstrategies.com. You can email any one of their trading consultants at trading@protraderstrategies.com. In fact, they're waiting by their phones right now at area code 310-598-6677 to structure some type of a payment plan with you as well. So you can put that together. Now, right below that underline is the link that will take you directly to that $19.95 discount page. So that's not live. You have to copy and paste that onto your browser if you'd like to check it out. But easier than that, you can go to the chat box on your GoToWebinar page and just simply click that on if you see there under the chat box, and that will take you directly. That link is live. And so you can take that directly to the sign-up page, and you will be up and running with that $19.95 discount, okay? But if you're interested in a payment plan, just contact Pro Trader Strategies at the email address you see right there, or call them directly, and you can structure a payment plan. You can be a student of mine as early as today, okay? Now, I want to thank you. We have about 10 or so minutes left for questions, and I want to thank you all for holding off. I'm going to leave this page up here on the screen, but I'm going to answer any of your questions that you may have. So let me just open up the page here and see what you may have been asking. Steve asks, can this be used on a 10 to 15 minute binary trade? Yes, in fact, it can be very well. I don't, let me just start off by saying I don't trade binaries. You know, I know they are very popular right now. But we have many students that do. In fact, I just got a testimonial from a student who said that they haven't had much luck trading binaries, and coupled with this combo, they've done tremendous just trading in the last couple of weeks. They're new members of mine. And so, and they say for the first time they're in sync, and they're actually trading with these strategies, and they're doing extremely well. So basically, all you have to do is just transfer over onto you know, whatever market you're watching on the binaries, if it's an actual stock, or if it's the indexes, or if it's the E-mini S&P, you can do, and it should work fine. And you saw right there on that 10-minute E-mini chart the signals we got that were generated yesterday. I mean, that's 30 points. If you had just taken the very first signal of the day, you would have had $1,500 profit per contract if you held out to the end of the day. Now, you know, once again, everyone trades them differently. We have some students that will hold on as long as they want. We have other students that get in and out, they take a couple of quick points and are out very soon. That's why there is no systematic numbers behind this, because everyone trades them different. We don't tell you you have to exit at the same point. We don't tell our traders you have to enter at the same point. Everyone has a different approach to trading. Some trade aggressively, some trade conservatively. Some like to trade one market, some like to trade others. Some like to trade one time frame, others like to trade other time frames. So it would be a statistical nightmare to try and keep track of every possible scenario. So we don't believe in that anyway. And so what we do is we teach things that have stood the test of time, and we train and mentor you so that you can ultimately sustain yourself, okay? But to answer your question once again, yes, I don't personally trade the binaries, but we've had some students who have reported tremendous consistency with them. Punel says, Pet D seems amazing. Does it work as you have indicated? Well, well, Punel, I just showed you probably over 100 examples in every market and every time frame. And if I were trying to cherry pick, it would have been very difficult, because I would have had to just stick with maybe one market or one time frame. But I've covered all the you know, cross of every market, every time frame. And so I'm not going to sit here and tell you that every setup it validates is a winner. You know, I would never do that, because first of all, I've been trading long enough to know that nothing can guarantee that. There are no guarantees in trading. All we're trying to do is put the odds in our favor, and the Pet D puts the odds in your favor by getting you in sync with the trend. Okay, that's about the best you can ask for. Mahmoud asks, do we need to use the 50-period moving average? That's a great question, Mahmoud. I believe he's a student of ours. Actually, you can if you want. This is where the discretion comes in. Now, we also apply 50-period moving average to a lot of our strategies, telling us to buy above and to sell below. Now, the Pet D is not based off of the 50-period. It has nothing to do with moving averages at all. So our more aggressive traders just trade without the moving average. They don't care what the moving average is or what it's doing, or they don't even look at any moving averages. Okay? Our more conservative traders will apply the moving average. So this is where, once again, we say it's up to you. We're not going to sit here and tell everyone to trade the same way. So it's up to you, and this comes through paper trading and your own due diligence and research with the method once you understand it, and seeing what works best for you. Okay? Let's see. Pat asks, what is the Pet D? Is it a proprietary tool or indicator? Yes, it's the only thing we can really go into detail is it's a proprietary tool based off of momentum. And the reason being is because we have outside sources interested in this tool for purchasing it or even licensing it. And so even though we haven't gone in that direction yet, we don't just want to simply divulge rules, because then it will be stolen and people will make their own tool from it. It's a great proprietary trend tool identification or indicator. So it simply identifies the short-term trend. Okay. Now, if we licensed it the way some of our clients that are hedge fund managers want us to, then we'd have to charge you roughly every 4 months, and it would be much more expensive. It would probably cost more than the double 2-for-1 combo we're offering right now. So if you take advantage of this discount as well as getting the other strategy, they're yours for life. You'll never have to pay more again. There's no added cost each and every year. It's yours for life. Okay. Revo is asking, from where do I get the PET D? Well, it's included in our combination, our candlestick combination, and the information you see in front of you is how you contact us. You can contact Pro Trader Strategies, the email address there, or the phone number, and they will set you up with this combo, and it will have the PET D. Now, one of the main questions people ask, what platforms do these work on, where you get the buy and sell signals as well as the up and down arrows and the PET D colors? They work on TradeStation, NinjaTrader, MT4, and Metastock, and they can also be applied to Thinkorswim with a few alterations. But those are the main ones that it can be applied to. Okay. Zach asks, do you see point in using both the PET D and the 50-period moving average? What about multiple time frames used at this time? Now, those are good questions. Once again, it is entirely up to you. See, what we do is we, in the first process of learning each and any of our strategies, we always, hold your hand and we go over everything with you, and then we want you to paper trade for a while to see what works. We tell you all the different variables, and then it's up to you to decide. As I stated, we have many traders who trade a certain way. They'll trade aggressively or conservatively, still using the same basic format of the strategy. We have other traders who use the same basic format but trade it aggressively or conservatively. So you can have two signals based off the same format. Two traders take them with entirely different results. Maybe one trader makes 1 or 2 points, the other trader makes 20 points, all because of the way they want to trade it. So there's no right or wrong answer. It's all what works best for you. Okay. Now, in terms of time frames, even though we don't suggest or we feel it's a requirement, many of our traders do like to use this on a higher time frame. In other words, what they'll do is apply the PET D on a weekly chart, and then if they see that all the colors are red, well, then they look to go short on a daily chart if the colors turn red, and vice versa. Once again, this is not a requirement. It's entirely up to you, but this is one way our students use the PET D. Okay. Roseanne asked, can this be used for Forex? Yes, Roseanne, I showed a lot of examples. I just showed you how it works so well in the euro dollar and the dollar yen. So yes, it works tremendously. We have so many people that use it for the Forex, as well as strategy number 5, because a lot of Forex traders like to use candlesticks. Strategy number 5 is a perfect strategy for trading the currency pairs. So once you have strategy number 5, you already have a great strategy to trade with. Once you apply 5 with the PET D, well, you ramp up your odds for success trading currency pairs. So it works extremely well with them. Let me see here. Also, what platform does this work on? Oh, I see someone is asking the question I just answered. As you see, it works on TradeStation, Metastock, MT4, Sierra charts, one of the ones I forgot to mention, Sierra charts as well, and Thinkorswim as well, but there are a few alterations you have to do with Thinkorswim, but it can be applied with Thinkorswim, okay? One on candlesticks and one general. I'm not sure exactly what you mean by that, Pino. I'm not sure if you could go into more detail with that question. Joseph asks, does this have a guarantee? Joseph, we have if you could see there, we have a 30-day exchange for any product or equal or lesser value if you are not happy. So in other words, we give you 38 years of information, of strategies, of tools, of things that have taken me 38 years to accumulate. So many people in the past, when we first started out 7 years ago, would take that information and want a refund, but then just turn around and continue to use it and give it to all their friends. So it's not really fair. What we can do is, after 30 days, if you're not completely satisfied, we can exchange it for another product we have. Okay, no questions asked. You can exchange it for something else, equal or comparable value. Dave asks, Steve, you've been using this for 38 years. I've been actually using this for a little over 30 years, because when I first started out on the floor, I wasn't a specialist. I didn't start out as a specialist, but a little over 30 years, yes. Martine asks, do engulfing patterns ignore wicks? That's a very good question. Yes, they do. I know that for some reason, some educators feel that an engulfing pattern has to include the wicks or the extreme high and extreme low or the tails of a candlestick pattern. That's not the standard engulfing pattern. All you want to do is the open to close of bar number 2 engulfs the open to close range of bar number 1, and that's engulfing. It doesn't matter if the open to close of bar number 1 was maybe 3 ticks or 3 pips. It doesn't matter. As long as bar number 2's range is larger and engulfs bar number 1's range, that's an engulfing pattern. Now the trick is, how do you apply them? For some reason we've been taught that they're applied as reversal patterns. I started using them that way, and guess what? They would work great until they didn't work anymore, and I gave everything back. It took my mentors to show me that all strategies, all techniques work better if you are in sync with the trend. Once I learned how to apply the PED-D, it changed everything for me. So this is what we're trying to give to you as my students and as my members. We're trying to get you a nice strategy, some nice structure that comes with rules, comes with stop placement, exit points, entry points, money management. And then we give you a tool to know how to apply it in sync with the trend. It's that simple. Okay? Let me scroll down a little bit more for some more questions. Remember, people keep asking which platforms it works with. It works with Sierra Charts, TradeStation, NinjaTrader, MT4, and Metastock. It can also be applied with Thinkorswim. There's just a few alterations you have to be made with that, and you can contact our tech support at ProTrader Strategies, and they'll help you set that up. Okay. Mahmoud says it's really useful. I'm still using it. Well, thank you, Mahmoud. Yes, as I said, Mahmoud is a student of ours, a member of ours. And another thing I want to mention is that once you become a member of ours by purchasing our products, you're a member for life. This is not something where after 60 days you're on your own and you have to pay more in order to get correspondence with me. You're always going to be able to email me. You're always going to be able to stay in contact with me, and you'll always be able to have any questions answered. So this is a more of a mentorship. Okay. Taking just a few more questions here. Tribim asks, what is strategy number 5, momentum or a pullback? That's a good question. It's actually both. It uses a candlestick pattern. Sometimes you'll see that pattern in a pullback. Sometimes you'll see it in momentum. The only point is, regardless, it's always going to be in sync with the trend, though. That's the only difference. So the pullback will be in sync with the trend. The momentum move will be in sync with the trend. We are never going to use this candlestick pattern as a topping formation or bottoming formation. We're never going to use the exits and exit points, to stop and reverse, or we're only going to use all of these pieces of the puzzle to be in sync with the market. Okay. All right, I think we're just about out of time. I've answered just about everything. Remember, this is a great, great discount. I know some people may say, well, that's a little bit too rich for my blood. It looks great, Steve, and I'd love to have it, but I can't afford that payment right now, even though you've discounted it down to $19.95. Trust me, it's okay. We have payment plans where you can put down a relatively small deposit, and you can start trading as early as today or tomorrow with it once you contact the people at ProTrader Strategies. So it's a great, great deal we have, our 2-for-1 combo. It's called our Candlestick combo, and you get a very consistent strategy that was based off of and designed for candlestick trading, and you also get one of our most popular tools at Specialist Trading. That's the PED-D. I use it on a daily basis. It's really helped me a lot. Mostly, you get a great discount as well. This is usually running for over $3,000. We've discounted it down to $19.95, but for a limited time only. So if you're really interested about taking your trading to the next level, contact the good people at ProTrader Strategies. There's their email address once again. You can contact them at trading@ProTrader Strategies or call them directly at area code 310-598-6677. Now this link down here is the link that automatically takes you to that discounted $19.95 deal. But you'll have to cut and paste that onto your browser. It's much simpler to simply go to the chat box in your GoToWebinar page and just simply click that on, and you can be up and running with that discount. But if you want to take advantage of a payment plan where you can be up and running really quickly for a small payment amount, contact ProTrader Strategies, and they'll set you up right away. Okay? In closing, I want to thank you so much for taking time out of your Thursday to join us today. And if you're really serious about taking your trading to the next level, I look forward to you purchasing our candlestick combination. Thank you so much. I wish you the best of luck trading, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much, and I shall see you next time. Bye-bye.